Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 2nd of June. Starting off with the FTSE 100, which is still within that range, 87 to 8,800, looking for an end-of-day close above that, obviously, to take us up to 9,000, hopefully by the end of this month. On the downside, hoping that 86.50 would stem any losses if there was a rug pull. Moving on to the DAX, and here the situation somewhat weaker, but still the situation is that we're above the old March resistance, 23,500, and still looking for the top of that rising trend channel from April last year as high as 24,700, and hopefully getting that by the end of this month while we're above 23,500. Moving along to the situation at the Dow, and obviously we looked at this over the weekend, but just a reminder, here it was looking encouraging in the sense that we've had an RSI 50 rebound and looking for a break of that resistance line there from February. What is particularly positive here is the way that both the 50 and 200-day lines are rising, so that does give us the steer that we could break that resistance line and also break 42,800, which is recent sticky neckline resistance, post-March resistance for this market. Above 42,800, obviously looking for the next level up, which was 44,000, and hopefully that would happen by the end of this month. The other key point is that the floor of that rising trend channel from this time last year, 41,900, has been tested on 3 or 4 occasions. Obviously we had a slip through that, but the longer we stay above, or at least on the right side of 42,000, the greater the chance of a recovery here. Eventually, the best case scenario would be up to 47,000 at the top of that channel. But maybe that's for the end of the summer, and also if, when and if the tariffs situation sorted out, the Middle East is sorted out, and probably also Russia, Ukraine. On the downside, worst on any rug pull, currently seen as being that 50-day line there at 41,000. Moving along to Bitcoin, which after a few sticky days seems to be trying to remobilize itself. Here we had support basically in the middle of that flag there, the second flag that we've had, or third flag actually we've had since the lows in April. So 103 there, that's just between the 101 and 106 flag length, and at least while we're above 101, looking for a retest of $112,000 over the first part of June. Best case is that we get up to the top of that rising trend channel from early 2024 at 123,000 by the end of this month, although at the moment that seems to be a bit of a punchy call. Moving along to the situation at gold, and here it was also a situation where we're trying to consolidate, and in this case we found support above the rising 50-day line as we did back in April. That obviously led to the highs. Hopefully the same trick will happen again, but we need to break 33.50, which is that April resistance line, in order to get our 3,800 target by the end of probably next month now rather than this month, unless we get a quick clearance of 33.50. Downside at the moment seen as being the 50-day line there, 32.16 at the worst. RSI 50 rebound as well on Friday, so that also gives us confidence going forward. Moving on to the stocks, and starting off with Alkemy, which has come up with decent RNS today, gapping higher above the 50-day moving average, double bounce on the RSI 50 as well, so that's the kind of thing we like. In fact, now we're basically feeling that at least while we're above the floor of the gap there, £1.30, looking for a minimum of the top of that rising trend channel from the end of 2023, hopefully as high as £1.90 plus by the end of this month. But the key here is holding the floor of that gap and ideally staying above the top of the gap at £1.40. On to Cell AI, which is not Celadon, but is actually this stock here. Here we've exceeded our big target there around the 0.6 pence level. Above that, we're looking for the shares to hit a new leg, or get a new leg to the upside, as high as 1.36 pence, maybe as soon as the end of this month. That's how strong this looks. The news today, obviously the subscription and very strong situation where a stock rises after a fundraise like that. But the upside here anyway looks as though it's set in stone while we're above 0.6 pence. On to Corcel, which I think had a mention in the Mail on Sunday yesterday, and has gapped up. We're already on the case here. We're already looking for 0.28 even before Joan Hart's intervention, and now we have been looking for 0.45 by the end of this month, which hopefully after today's rise is all the more likely. Upside value while we hold above the previous target there at 0.29. On to a requested stock, where apparently there was a live Q&A or a live presentation by the company. I noticed that 72 very excited people were listening to that presentation just a while ago. The current situation is that we are on our broken our fourth target there at 0.72, and basically looking for a final destination as high as 1.07, the old 2024 resistance, hopefully by the end of this month, or the way things are going much sooner than that. As you can see that we've had defense holdings in our sights since basically the break of the 200-day moving average there at 0.06, so the charting has worked. Moving on to a situation where it's good to see the bears slapped and in the rear view mirror here, with great recovery here from first class metals, and they thoroughly deserve it too. We are on the second target now. We're looking for 4 pence after the previous target there around 2.8 pence has been delivered, or was delivered on Friday, above 2.8, looking for 4 pence by the end of this month, or hopefully even sooner. After that, we have the dizzy heights of last summer's resistance at 5.5 pence, but one doesn't want to jinx it too early. Upside certainly valid while we're above the old November resistance there around the 2.3 pence area, which ties in with our target level. Moving on to a stock which was trying to avoid looking at, but just sort of drew me in, which is normally interesting. Here you've got a situation with GTC or Getech, where there's a rising trend channel base. It looks like there's plenty of support above the floor of the channel, and above that at around the 1.7 pence level, looking for up to 3 pence by the end of next month. Obviously, if you're cautious, you'd wait for a break of the 200-day line, or at least recent resistance at 2 pence. But where's the fun in being cautious? Bounce off RSI 50, and that bouncing on the 50-day line suggests that we're already on our way. I did suggest over the weekend, I think it was, that it looked like there was an overshoot at Hvivo, and overshoot to the downside, that is, and obviously today, with news of a direct-to-share buying, that's what we've got. There's also bullish divergence as well, so the April low there, obviously higher than the May low, but the RSI hasn't gone any lower, and about an end-of-day close above Friday's high at 9.25 pence. Should take us up towards the April support there at 12.5 pence, even if we fall away after that. So 10 out of 10 on the psychic approach there with Hvivo. Moving on to core Potash, where you don't have to be psychic at all, because just in the run-up to a golden cross, some mid-move consolidation there between 3.25 and 3.5 pence. End-of-day close about 3.5, and we should be looking for the top of that rising trend channel from April as high as 4.75 pence by the end of this month, or even sooner. This looks very exciting indeed, given that we're going up in a step fashion. So vertical moves, then sideways, and without losing any share price. On to Microsalt. We're trying to ignore the losses that the company made, but here it looks as though the charting situation is looking pretty strong, or at least interesting, in the sense we've broken that line of resistance from May last year. That was around 61 pence, above 61 pence. Looking for, perhaps optimistically, to £1.13 by the end of next month. Not quite sure how that would happen, but we've had an RSI 50 rebound. We've bounced off the 50-day line and broken that trend line there as well. The only thing missing probably is an end-of-day close above the 200-day line, but really, with that RSI 50 rebound, looks we should be on our way. And even if you don't believe the 100 pence plus target, you just go for something in the 80s by the end of this month. On to a stock which is Probably more for the boring investor, but boring tends to be good in the markets, of course. Here we've got Pebble with a gap close buy signal at the end of last week through 35 pence. So the shares have already rocketed after that. Current situation is that we're looking for progress within a broadening triangle there from June last year, and looking for 66 pence perhaps as soon as the end of this month. Ideally, we stay above the old support there from December at 42 pence on an end of day close basis early this week. On to Synergia, where various people have died of old age since the latest story has been developing there. We've got a situation where we're bouncing off the lows, which is actually quite a good signal in the sense that we had gaps down in February and but two gaps down in February, and we've had a gap higher now, so it looks like as though it's actually, in theory, bear trap island reversal. Initial target here would be the top of the triangle that I am drawing at the moment, 0.035, and we're looking for that by the end of this month. Obviously better news, at least a timeline there from the company, and also bullish divergence in the RSI window, so lower lows for May, but higher RSI on that, so hopefully a little turnaround for once on Synergia. There hasn't been any bullish activity here for a year on that situation. On to Uru, and here looking interesting in the sense that we've broken above a rising 200-day line. If you look closely, you might be able to see that the 50-day line is also rising, which means we're in the run-up to a golden cross. We've broken RSI 50 for the first time since March, and means that we're looking for up to 8.6 pence by the end of this month. In fact, I would actually go for even more than that. I would go for 10 3/4 as the top of that rising trend channel, and upside valid here while we're above the 50-day line there at 4.6 pence. Finishing off with the Westminster Group, where it looks like the market's finally giving the company the love it deserves. In fact, we already had a bear trap gap reversal signal. We did have a couple of gaps down in April, which wasn't a good look, but since then, as a break of the March resistance at 2 1/4 pence, and we have been looking for 2.75 initially, which obviously should be a done deal in coming days. Next level up to 3.5 pence, which is the upper parallel at the top of that triangle. But looking comfortable here while we're above the latest gap there, just near the 2 pence level. That's it from me today. More updates tomorrow.